Alright, so what's going on, guys? Today we are going to do a trade breakdown of a trade I took inside the NFP week, inside the London session. And before we get into that, make sure to leave a like and subscribe so you can get more of these every single week. I am trying to do from now one of these every single week, but if you are inside my Outlooks premium channel, you will get to see one, to see these things live, like when they're happening, and two, you'll get a trade breakdown every single trade I take. So these are very crucial to your development because from these things you can learn, and by seeing them live also you have huge potential. But let's just get right into it. So what we have right here, and by the way, let me talk about this first. Let me talk about this firstly. So this was NFT week. This was supposed to move like shit. This was supposed to be very choppy and everything. But before we get into what I say, I just want you to understand that every single high impact news driver, whether that's FOMC, whether that's some Powell chairman speaking, that is just a smokescreen. That is just a reason for the price to drop because the price is driven algorithmically. So let's say we have an FOMC. Why does the FOMC move the same? Like it usually moves the same. Why does the price go down instantly when this week we saw that? Why does the price go down at 10 a.m. instantly when the Fed Chair Powell didn't even open his mouth? He didn't even say hello. Like it's crazy. But yeah, why am I saying you this? Is that because in this Friday during the NFP session, no, not session, but during the NFP news event, we had a major bank collapsing live. So again, they're just using that as a smokescreen to drive fly slower. So they don't listen. These markets are driven algorithmically. All right. So I just wanted to state this before we get into the breakdown, and let's just get into it. So I'm not going to explain what an event horizon is because these details are for my premium group. But what we have right here is that we have a 15-minute fair value gap. But before we even get into the price section, we have to understand that we have to look at a time period in which we want to take a trade every single day. And this is the London session. And I usually trade between 245 and 320. This is when I get my entry always because the market is driven algorithmically, my friends. So what we see right here is as we go on right into the 245 and 320 macro, we are inside a 15-minute fair value gap. Therefore, as we are seeing this with our daily bias in mind, that we are going to see lower prices because I told everyone from the premium group that we were going to see lower prices, even though the candle on the daily time frame was big up close like the last candle. I told everybody that we're going to go downside with speed. So this is what we saw. Our daily bias was bearish for the day, therefore we're going to seek for a short, right? Usually I seek for longs in London, but this situation was different because we had this is what it is right here. This is a new week opening gap, which acts as a very powerful magnet for price. So what we see right here is and this is why I added these, because I did not add this. I'm gonna get to it, but we are inside this 50-minute fair value gap, but inside the time period, and then we need to see a structure shift for our entry to be for our entry signal to be there. So we see the structure shift after we take this short-term low, and then we create this low, and as we know, as we think that the price is going to rush to the downside, I'm going to take the breaker entry, which is a breaker is just the candle before we take this high and then we take the low. So this is the candle because it broke these people that were short here and it broke these people that were long here. So we have this breaker here. I entered on this breaker with the stop loss above this high, and I did not take these entries too. This is why this says potential pyramid, because I noted this after the fact. But every single thing you see, this entry at the breaker, this breaker itself, this 50-minute fair value gap, this event horizon engaged, and all of this was annotated live. So we have our first partial here at the sell side liquidity pool. Of course, we could have added, what does pyramid mean? Pyramid means that you can add another short position. So if you're short here, you can be short here, and you can be short here again. You can add more to your position, and you're going to start with the biggest lot size here, you will half it here because this is a pyramid essentially. It is like this. So you will add your most lot size here, add half of it here, and half of this lot size here. So we'll have a full half, like quarter or something. And we can see that here we have, what is this 50% of discount? Because somebody told me, what am I measuring with my fib? I have this high to my terminus, which is my target, and I'm gonna measure where the 50% of the discount is going to be. So let's say we have this premium discount array, right? This premium discount, we put the Fibonacci and we have our equilibrium right here. So if the equilibrium is here, we're going to take 50% from the equilibrium to the discount zone, and this is how you find the 50% of discount, which means that we will not take any pyramids before that, because after this, after it, my bad. After this is a partial taken area, and as we can see right here, price goes below it into the sell side and then comes back literally one tick above it to get another entry here, and then we can go. This is not random. Like you can see, it dips below and just comes for a fraction of a second, for a fraction of a tick above it, and then it goes straight to the downside. So this was my first partial. My second partial was at the high of the new week opening gap, and the third partial, I mean the full profit was at the consequent encroachment of that new week opening gap. So if we have, let's say, this is the new week opening gap, we have the high of the new week opening gap, we have the consequent encroachment, which is the midpoint, which you can actually get with your Fibonacci. You put the fib from the low to the high, and you get the new week opening gap's consequent encroachment, and you have the low. So therefore, this is our last target. Make sure to leave a like again, and this was our breakdown. I'll see you in the next one. Peace.